Inventory has hit a multi-year high. Check this out. Home sales in Greater Vancouver down 24% amidst economic turmoil. When interest rates are low, real estate markets generally see more activity. But even that tried and true trend has been bucked by the trade war with the United States, according to new statistics published by Greater Vancouver Realtors. So we're seeing prices across all property types slipping. What does this mean for you and your next move in the Vancouver market? This April, we are starting to see rising supply, softening prices, balanced to buyer leaning conditions in most segments. And whether you're buying, selling, or just watching, this could be a turning point in the market. And this video can make your next move in the Vancouver market a lot of money, but we gotta understand what is going on and why these numbers are trending downwards. So we're gonna look at the Greater Vancouver market overall. We're gonna look at sales and inventory trends first. Then we're gonna look at changes in pricing. And then we're gonna look at key market drivers. What is influencing supply and demand? This way you will know exactly what is going on in this weird market where prices are falling and opportunity is starting to show up right on your doorstep. Let's start with sales year over year. In April 2025, there were 2,150 sales. Last year, April 2024, there were 2,318 sales. This is a 7.2% drop year over year in home sales. This type of drop can reflect continuation of buyer hesitation as they face economic uncertainty and high inventory. When we look at the numbers in more detail, we can see actually that the condo market has more sales than it did last year, whereas the detached and townhome market is way slower this year. Okay, now let's look at month-over-month sales. So sales velocity. In March 2025, there were 2,083 sales. We're up to 2,150 sales in April 2025. This is a 3.2% increase month over month. So we're seeing a modest spring bounce. This shows activity is picking up, but not with full confidence. It's good to see this small bump in activity, but for April, this is typical and it is still well below the 10-year seasonal average, suggesting a cooler than normal spring. In April 2025, there were 15,605 active listings. Compare this to the 12,125 active listings last year. We're seeing a 28.7% increase in listings year over year. That is insane. So inventory is at its highest point in years. If you're a buyer, this is great news. High supply without a matching surge in demand is putting a lot of downward pressure on pricing. So buyers right now have a lot of option and pricing is in their favor. But let's look at month over month. So in March 2025, there were 13,982 active listings. So there was an 11.6% increase March to April 2025. This month over month spike suggests seller confidence coming back as we move into spring. And if this trend continues without the sales keeping up, like I said, there was maybe a 3% increase in sales and an almost 12% increase in listings, we may see a more pronounced shift into a buyer's market. So as I mentioned in the intro, inventory is way up, sales are down. What does this mean? It all comes down to pricing and how pricing is affected by sales and inventory. So let's look at pricing trends. First of all, year over year change in benchmark price. In April 2025, the composite benchmark price was $1,169,300. In April 2024, this benchmark price was $1,183,500. So a small 1.2% decrease year over year. This modest correction is suggesting price resistance, but for buyers, this may be a good chance to enter the market with pricing leverage. Okay, so for month over month, the benchmark price for March 2025 was $1,181,200. So a 1% month over month decrease. And we're seeing these month over month declines in all three property types. This shows that sellers are really adjusting to the rising inventory and are starting to slash their prices. If rates drop later this year, we may look back at April as the low point before a rebound. And that's why I say in the intro that this could be a turning point in the market. With interest rates slated to decline later this year, it could bring back a surge of buyers into the market. And right now is a really good opportunity to get an amazing deal on a home and have your pick of the litter because you have so many choices on the market right now. I'm seeing some townhomes with 6 or 7 listings in the same complex, same unit, and they're all fighting each other to get sold. Imagine the amount of leverage you have if you're trying to buy a townhome in this situation. If one seller says no, you have 6 more to work with and leverage against each other. I've seen some townhomes sell for way less than they did last year, so I saw a 3-bed, 2-bath in Port Moody sell for around 1.15 million. Now I'm seeing a 3-bed, 3-bath that is larger selling for less than that. So you get more home, better complex for about like 50 to 75K less than it was selling for last year. I've seen some townhomes in 𝐎𝐒 with some buyers, and we are looking at upwards of $100,000 off these $1 million townhomes. So the stats show that prices may have dropped 1% month over month, but looking at these townhomes, we're getting almost a 10% discount on what these were selling for last year. So the stats do say one thing, but working in the market and finding these deals say another thing. All right, now let's look at sales to active ratios. So we're going to take the total sales this month, which was 2,150, divided by the total active listings, 15,605. We get a 13.8% sales to active ratio. This means we are in a balanced market. Last month, we were at almost 15% sales to active ratio. So it actually dropped 1.1%, trending more towards a buyer's market. But technically, we are still in a balanced market. So overall, we're definitely not in seller's territory. Buyers now have the upper hand in many submarkets. We went through supply and demand. Then we looked at how that's affecting pricing. Now we have to look at any external factors that could affect your decision in buying a home in this market. So section 3, key market drivers, who is influencing supply and demand. So first of all, who is buying? Right now, we're seeing a lot of first-time home buyers start to enter the market. Upsizers and investors are slowly returning now as inventory rises and interest rates continue to drop. So for many buyers, we're seeing rising inventory and stable prices create a more relaxed buyer experience, especially for first-time home buyers. But first-hand experience, working with a lot of first-time home buyers right now, they have so many options that it's actually overwhelming and they want to see everything. And you know what? More power to them. Going and seeing these homes in person are going to be your next best opportunity, especially right now in a market where we have more time to go out and shop and look at things and really deliberate on whether or not we're going to write an offer or pass until the next weekend where 10 more listings are going to come up. If you're a first-time home buyer, it is so chill right now, and you're getting really good deals and a lot of good options. But it does seem a lot of the other segments of the buyer pool are waiting for more interest rate cuts before committing fully into purchasing a home. Who is selling right now? I'm seeing some long-term homeowners actually decide on selling. Some investors are liquidating. And then strategic movers. We call these people who move up and down given the market. So when the market is a little bit depressed like it is now, so it is strategic to move up in size of home because you're getting a larger discount on the more expensive property than you are on your cheaper sale. So a lot of home sellers are what we call upsizers. And sellers are being strategic as well. They're trying to list in the spring where it's notoriously busier. And, you know, looking at the stats, they seem pretty sad. But we did see a small uptick in sales because we are entering the spring market. So seasonality still is playing a factor in the greater Vancouver market. But it does seem like a lot of sellers are trying to get their homes on the market before more listings start to pop up. And we are seeing more listings month over month start to come on the market. So I can see why sellers would feel more anxious to getting their home on the market earlier than later. So next, let's look at interest rates and financing. So the Bank of Canada actually held rates this month. The overnight rate, or the key interest rate right now, is sitting at 2.75%. And the next scheduled date for announcing the new overnight rate is going to be July 4th. So most likely in my next set of market update videos for June, you're going to see all of that info, and we'll see how the interest rates are affecting the market, whether or not they decide to drop it, leave it the same, or even increase it. This in-between period is creating a lot of hesitancy with a lot of buyers, but it is also opportunity for you. While everyone is waiting on the sidelines, this could be that turning point in the market. We could look back and see that this month was actually the low of the market, because as soon as interest rates start to drop again, it really does seem buyers are going to be more confident into entering the market. And you might not have that luxury of tons of options and a really relaxed buyer experience, lots of negotiations, getting really good pricing. And if not, you have the next one to move on to. These types of markets don't last very long, especially when people are expecting interest rates to fall through the year. All right, conclusions, recommendations, and market outlook. So for buyers, you're in a strong position with growing inventory and modest price declines. This is your chance to get a banging deal in the real estate market here in Greater Vancouver. And you know what? I've been saying something along these lines for the past 3 or 4 market updates, but this so far in April 2025 has been the most true it's ever been. Condos and townhomes are really good entry points right now, but if you're a buyer in the detached market, you have so many options right now, and the detached market has the lowest sales to active ratios in all of the market sectors, meaning you can really get an amazing deal on a detached home right now. So I would suggest acting earlier rather than facing potential competition come summer or early fall. So don't wait for the perfect bottom. Timing the market is nearly impossible. Focus on value, long-term growth areas, and buildings with good fundamentals. This way, in the long term, you will be protected. And we're seeing that right now, where there are only a few sales happening every single month. It is these areas, good areas with good growth and good buildings, desirable neighborhoods. People that made these smart buying decisions 5 years ago are really benefiting from it now. Because while other homes are sitting on the market, these ones are actually selling. And now for sellers, you are in a competitive market. Expect way more informed buyers and longer selling periods. Staging and pricing are critical to success. Pricing is just positioning in the market. It is an invitation to buyers. It does not reflect what you'll actually sell for. Consider listing now before more supply comes online, and I would really suggest pricing aggressively. If you've priced too modestly or tried to leave some room for negotiations in a buyer's market where prices are trending downwards, there's a chance that 2 months roll by, nobody has purchased your home, and the market has fallen even further, and you have to price adjust more aggressively than if you just priced correctly in the beginning. It's like chasing a ball down the hill. You don't want to chase it all the way down the hill. You want to get ahead of it and catch it as it's coming down. So don't chase last year's prices. Price slightly under the market to spark activity, and be ready to negotiate on terms or offer incentives like flexible closing dates. Market outlook: in the short term, we're seeing balance to buyer leaning with modest price corrections across all property types. And then mid to long term, if interest rates fall, demand could return, particularly in the entry-level condo and townhouse markets. Usually when we see these changes, it's in the condos first, then the townhomes, and the detached market will see it last. So now with more listings than we've seen in years, right now may be the most balanced moment for buyers and sellers in a long time. If you like this video, leave a comment. I respond to everything, and subscribe for monthly updates just like this one, and I'll see you on the next one. Peace.